This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action that we saw on Monday. Grains mostly lower, especially soybeans and wheat, corn firm, while we saw good strength in that cattle market on Monday after the release of Friday's cattle on feed numbers. We are joined today by our good friend John Heinberg with Total Farm Marketing. John, good to catch up with you, sir. Hope you had a good weekend.
Yeah, one of those beautiful October weekends here in Wisconsin. So we'll see how things kind of play out because, last week we went from the range of, it's snow on the ground to near 75 degrees by the weekend. So very interesting times in terms of the weather, that's for sure.
Definitely. Well, I know folks are seeing snow in parts of the northern plains on Monday, rain in parts of the southern plains, much needed there. So a lot of things on the weather front. Harvest windows tightening up. I know we'll talk about that when we get to grains, but we're going to start with livestock trade today. Cattle was the bright spot on Monday. That cattle on feed report down 1% on Friday, and I'd say a fairly neutral report, John, but it feels like the momentum from those cattle on feed numbers spilled into Monday's market action in the cattle sector.
Yeah, definitely. We got some money flow moving into the cattle space, and that's something that we've been need to watch here is how far do they want to push this? New contract highs today in the December contract, as well as that February contract, October also as well, but we're getting close to expiration there on the 31st, so that October contract will come off the books here pretty soon. But again, we're thinking about the cash market. Really good week in cash. We see retail demand continue to climb. Strong day of both choice and select carcasses today. That just gives the packers a little more momentum to bid up here, and that just seems to be the trend. We're finally in that window where we're realizing cattle numbers are starting to tighten out. The demand is good as we're building up here for the holiday and holiday trade for the end of the quarter. And that's just giving this market a nice little boost in terms of some money flow. You go to the feeder side, the funds are still short feeders on last week's commitment of traders. So, if they're sitting on that position, they're kind of behind the eight ball here, especially if the grain market's starting to calm down a little bit. At least we saw that with some of that trade today. So good strength in that feeders. Now, the biggest thing is in both these deferred contracts, we are putting close to some of those all-time highs, out there in feeders in the next summer. Look at $200 plus on August feeders today. You look at August live cattle, 155 for next summer, or just short of that today. All-time high is in the 160 window. So we're getting up there to some pretty lofty levels. So producers need to be still wary of where we are with value and make sure we protect that, because again, if we move into a difficult economic environment or recessionary type environment, that'll come into play in this cattle market. We'll see some profits come out.
Well, and I know cattle again at highs here. We haven't seen, I think, 7-year highs was the number I saw today. And just you hit the nail on the head, though, there at the tail end, just watching some of these economic factors. What could that do on the demand side, et cetera? Going to be very interesting, I think, to see the direction of this cattle market through the fourth quarter and into quarter one of 2023, John.
Very much so. Again, we'll have to see where the numbers are, where the demand is. And, we're kind of accelerating out here a little bit. So if you go look at the charts, we had a nice steady climb, and now we're really ramping up the speed here. That tells you we're probably going to get ourselves close to a peak in a hurry when that time frame does come. And then we'll probably see some value come out very quickly, just, opposite of what we saw in the hog market here a few weeks ago when it liquidated so aggressively. So, but at least right now, a lot of the factors are pointing the right direction. You got the fundamentals there with solid demand, decent cash. You go look at some of those other factors. Open interest is at multi-year lows, so there's some room for money on the sidelines to move in. Again, where the managed money positions are, they got some room to grow this if they want to. So there's a lot of little bullish arrows pointing higher at this time frame, and producers need to find a way to make sure you protect yourself on additional strength, because livestock markets like to V bottom and V top. And we can see how quickly things roll over. Again, if you're not sure, just look at what happened to that hog market back here a couple weeks ago.
Very true. Well, segueing right into the hog market, what are you seeing on the charts? Felt like it was maybe just some profit taking on Monday. This hog market's been rather impressive the last couple of weeks. We've talked about it. What did you see there on Monday, though?
Yeah, December hogs was a consolidation day today. I lost a buck 20 overall in the trade, but still well within Friday's range and near the top of these highs. So I wouldn't be surprised that, again, we just see a little bit of profit taking in this window. Market is still well supported. Decent demand out there. Again, retail values back over the $100 level on carcasses. Those things help out. We're really trying to watch the cash trade, see if we can get that going. Now we're getting the index starting to trend a little higher. It's still got about a $6 to $7 premium over that December contract. So that still keeps the arrows at least pointing a little higher on the cash market from that standpoint. So we'll have to see where this wants to get to. But again, today, we got that Chinese GDP data on the overnight. I think that was the biggest factor in those Chinese type products, which was hogs and soybeans, in terms of the trade today, because we just couldn't seem to get any traction. The number wasn't as bad as we thought it was in the 3%, 3.5% window, but it just didn't show any really good strength in terms of recovery. And then bringing in, President Xi's regime again this year, just I think has the market cautious in some of those areas. So that's something I think weighed on the front end of the pork market here today, as well as what's going on with those Chinese pork prices. But it's still good to see those deferred contracts pick up a little bit and get off those lows, at least finish mixed at the end of the day. Again, maybe reflecting that longer term value that's still out in front of this market.
Well, segueing right into soybeans, John, you talked about the China issues. And again, President Xi Jinping getting another 5-year term, an unprecedented move there. And it really feels like that the China news with the GDP you mentioned, President Xi next term, just their Congress in general wrapping up. Looking at the soybean market, there's a little bit of that concern out there that the geopolitical tensions will continue and that could hamper exports to China from the U.S., not to mention the other issues like the river levels, et cetera, competition from Brazil and Argentina. But that really felt like the biggest weight on this soybean market, as you alluded to on Monday.
Yeah, it did today. And just a lot of little moving pieces out there in terms of the China story. And, we had a pretty good closeout to the end of the week last week in beans. And we just kind of took that value right back out of the market here in today's trade. We did hold those bottom supports. So we do have a little bit of a, higher low put in. We need to hold that probably tomorrow and the next day. This market is very concerned about that Chinese demand. Now, we did get some friendly news today that we did see a big week of export shipments, 2.8 million tons, or about 106 million bushels went out last week. Was our fourth largest shipment week on record. So that tells you we got some beans moving. Now, where does that peak out? Do we continue to see another strong week next week or the week after, or is this it, in that regard? So that'll be what the market's really going to be focused on. Obviously, the river levels have been an issue in that regard, making sure those beans get down to that port, as well as other ports, and get them moving at this time frame. But one thing that we still got to keep an eye on, crush margins are really strong right now on the soybean meal side. Again, as we're crushing for oil as well as meal, but those crushers are making some money, so that provides some internal competition, at least on the domestic side, for those bean bushels. So that should maybe keep this market supported. Curious to see if we see somebody step in and buy some beans on the export front, maybe tonight or tomorrow too, on this weakness. Seemed to be the trigger last time around. So I'm cautious the bean market. We're watching that South American crop start coming together. Sounds like weather's in pretty good shape there. But at the same time, supplies are tight. And if there's some competition for those beans, that could keep this price at least supported in these windows.
You and I were talking as well. Soybean crush remains relatively strong. So I think that's a bright spot to watch here. And of course, on the cash side, watching those basis levels too across the country. I know we have the issues on the river, but there's some interior levels that are looking still fairly solid, John.
Very much so. And again, that's tied back to that crush market and the profit margins that are there. If they're making money, they'll pay whatever they need to get beans in. And so in that regard, in terms of keeping that profitability in front of them, keeping supplies in front of them, and the domestic crusher is very aware 200 million bushels is not a lot of beans out there, at least at this time frame, to split up between the export market and what we need domestically. So we'll have to watch and see how that plays out. But that still leaves some friendly things on the bean side. The other thing too, we're getting through the back half of harvest now. We're expecting to be about 75% or greater, probably 77% done, I think, is the anticipation for today. So now we're probably getting past that hedge pressure window, and that should maybe reflected a little bit in that cash market. as producers might be sitting on beans and pushing them back into next year. It's kind of what the market's kind of telling us to do right now anyway. So that might also wake up that cash and at least keep some support in the front end.
John Heinberg with Total Farm Marketing is our guest today here on Market Talk. John, corn market on Monday, relatively quiet, firm, I'll call it, down a little bit, but really just kind of held in there despite all the pressure in beans and in the wheat market as well. What's your thoughts with this corn market as we started the week?
I thought today was a pretty solid day considering the weakness in both soybeans and wheat. That corn comes in, finishes 1 to 2 lower, fought off the lows here from the other part of the session. Doesn't mean we're out of the woods by any stretch of the imagination. We're just kind of consolidating at the bottom of a range here. We get some negative news. We could break this thing down and take a quick 20 cents off this market just because it wants to. The fund's got plenty of length, so there's room if they decided to pull some money to the sidelines, they could. But, you go back and think about that cash market, and the cash market can lead futures here. You're talking to plenty of basis producers out there with their basis levels. Things are turning a little bit more friendly, seeing that in the local markets here as well as those numbers improved over the weekend. Again, that's kind of telling me maybe the supply is not there. We're getting closer to the end of harvest now. We're probably going to be past the 60+% point tonight on the crop progress numbers. And we look at the national basis as turning even a little bit on the positive side. So again, it's just a reflection of where bushels are and aren't. To me, it's an east-west issue, the lack of production in the west. What's it going to take to get bushels from the eastern side of the corn belt to the western side to meet that demand? And again, you see really strong cash markets out there, and that will ripple through the entire corn market.
I wonder as well, maybe you've heard, I've heard a little bit, some producers talking about the really strong winds that we saw the last couple of days, maybe impacted some corn that was still standing in fields, maybe knocked some ears off, blew them away, down some corn that didn't have a good stand to it here. I don't know if you've heard any of that, but I've heard a little bit of that too. I wonder if that's having an impact here today.
Possibly, it may be more isolated than anything when we get those types of situations. But some of the things, though, I'm hearing some talk of corn coming out fairly dry for some people. That affects test weight. That affects things along those lines in terms of final yield. So, the market's still anticipating the corn market getting tighter in terms of supply. The question still is the demand. Export inspections numbers are very ho-hum today. This is not the big shipping window for corn, but we'd like to see things at least be comparable to last year. And we're pretty far behind last year's totals at this time frame. So that's a little bit disappointing. And that demand story is probably going to keep in front of this market, even despite pretty good domestic demand and the need for feed out there in some of those tougher regions, as well as a fairly good ethanol grind last week.
Wheat market, I know exports there are still fairly dismal, ho-hum as well, and it just felt like the old adage, wheat was doing wheat things on Monday, John. That's about the best explanation that I could give there.
Yeah, it's a difficult market, and the demand is the biggest focus right now. We just can't seem to get bushels moved here. And again, that comes over and spills into the other grain as well. We just need to see some product move. Now, U.S. dollar was kind of back and forth today. Maybe we got a little bit of a trend lower in that dollar index that could help us out there. Obviously, keeping an eye on the southern plains. The amount of drought situations that have really ramped up here in the last handful of weeks across the entire country, not to mention just corn belt or wheat belt areas, it's going to be a big factor. We'll see where we are with planting pace and see how this winter wheat crop starts coming together. Maybe we're going to get a little bit of moisture. That's some of the talk. I think maybe that came into the market's pressure a little bit today as well. But we got a lot of things to be concerned about, at least right now. It comes from the weather standpoint going forward, whether it's corn, beans, or wheat. When you're looking at a drought map that we see now with well over 80% of the country in some form of drought, including some heavier levels of drought in the main grain producing regions, we put a lot of stock on this winter's weather to get some soil replenished.
John, how about that dairy market? Any thoughts there as we start off the week of trade?
Choppy market again right now, watching what's going on with that cheese trade. Again, softer on that barrel side today. Kind of put a little bit of a limit in that market. You got that November contract range bound. We're right smack in the middle of the range here. It's a $21 area. So again, producers, if we start moving higher, it's a window to make sure you're protecting yourself and build some floor. If we're moving a little bit lower, you just got to make sure we find some footing and get some traction in here. But again, we're starting to see a little bit of demand slowing down, at least in that dairy sector. But again, it looks like a market, which is for the last basically couple months now here, it's been trading sideways, looking for a reason to move one way or another.
John, great stuff as always. Before we wrap it up today, any final thoughts you have for us?
I know you're busy out there, producers, a lot of things going on, combines rolling, dealing with grain, dealing with other things at this time of year. Make sure you just stay focused on where your risks are. We still got great value in this market. I talked about making sure we protect the floors last week, especially if you're going to store bushels. Maybe try to capture a little of that gain from doing that, but make sure that gain's still going to be there for you. Make sure you got some floors underneath this thing. Again, for corn, your risk is to the downside here, given the historical price level. I'd rather have that floor in and keep that upside unlimited if we get something to make this market really want to trigger and fire out.
John, if producers need some advice, they want to talk to you and the folks there at Total Farm Marketing, what's the best way to do that?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. Don't forget about our website, totalfarmmarketing.com. A lot of great information out there for producers. Love to just have somebody pick up the phone. Feel free to give me a call. Love to chat with you, talk markets. Again, don't fall asleep on the marketing side of things in a very, very busy time frame, but you got some really good value sitting in front of you out there.
Well, John, always a pleasure. Thanks for the time. Enjoy the rest of your week, and we'll talk to you again next week.
Sounds good. Have a great week.
That's John Heinberg with Total Farm Marketing. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.